Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. Back again is right. I know I missed a couple videos last week. I was out hunting, had some time off work, so I did enjoy myself. Didn't get any deer, but we're back at it. We are going to cover one out of the consumer discretionary sector today. Best Buy. It is November 18th. I know, I can't believe already halfway through November. Hopefully everyone is getting ready for Thanksgiving, and if you're one of those folks who puts up your Christmas lights early, kudos to you. I know I typically do that around Thanksgiving. I may do it a little bit early while the weather's nice. Looks like we won't be getting some bad weather the rest of the week. Now, before we get into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day series Monday through Thursday whenever the market's open typically. And if you want to help out the channel, there is the thanks button down below as well. Now, go ahead and buy me a cup of coffee down there if you can. If you can't, I completely understand. Special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. This is the Vested Interest Stock Screener. This is how we will be going through the video. We'll look at this criteria here as we roll through, and then at the end we'll see how it stacks up. It must meet 5 of 8 or 6 of 9 if it's a financial company like a bank or an insurance company to make it onto my watch list. Now back to Best Buy. Check them out at www.bestbuy.com. That is their homepage where I pulled this information from. Again, that's www.bestbuy.com. That is their homepage. And they market themselves as a consumer electronics outlet store. They do sell more than that. Obviously, a lot of it is focused around electronics. I think that was their bread and butter initially, but they have branched out a little bit. So they've got Apple products, membership deals. I think they still have the Geek Squad that does, your hookup for your computers or setup for your computers, TV and home theaters, computers and tablets, all video games, appliances, cell phones, audio equipment, cameras, camcorders, drones, home furniture and office. This is where they've kind of branched out a little bit. Home furniture and office furniture, bikes and electric. Now I guess they are electric. You can go get an electric bike if you want. Outdoor living, toys, games, and collectibles, health, wealth, and fitness. I didn't even know they were in this kind of genre here. Wearable technology. I know all my 2 daughters and my wife have their Apple watches that they wear all the time. Car electronics, smart home, security, and Wi-Fi. This is how I remember them. Right back in the day, you might go to get you buy your first car, you might go to get a new radio that you put in yourself, or at least I did back in the day. They were a lot easier to put in back then, 80s style cars, early 90s. Home furniture and office equipment, cameras, camcorders, and drones, audio. I guess we're going over a couple of duplicates of cell phones. You get the idea, right? They're the one-stop shop for a lot of your electronics and some other products that you might want for your home or office. Now, the reason we are taking a look at them, down 3.95% on the day. We are talking about Best Buy Corporation, ticker BBY, out of the consumer discretionary sector, closed out the day at $89. Looks like they hadn't moved in the after hours, at least as of the time whenever I pulled this information. 52-week range as low as $62.92, as high as $103.71. Market cap of $19.111 billion. A beta of 1.49, so they are more volatile than the overall market. Price to earnings PE ratio decent at $15.37 per share. That's about where I like companies, or lower, depending on the company. I know tech companies in the 20s isn't necessarily bad, or faster growing companies, but these big established companies, I like them in the 15 or lower price to earnings ratio personally. EPS, earnings per share, sitting at $5.79. Earnings date coming up November 26th. So it wasn't the earnings report that had them drop. It was something else that had a big drop, maybe some negative news on them. I'm not sure exactly what it was. Forward dividend is $3.70 per year. They are quarterly payer, so divide by 4, though we will see that here in a little bit. Nice, very nice starting dividend yield, 4.06%. Ex-dividend date September 19th. Looks like they paid out in October. So they do have another dividend coming up here. First part of, I believe that would be their last payment, first part of 2025. Usually be, I think, January, their next payout would be. So they should have a ex-dividend date coming up here in a couple months. Now, 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $104.04. So they do see some upside as far as price appreciation on this one, at least according to Yahoo Finance. I'm not affiliated, just one of the sources I go to for information. Jumping over here to the right, I like to look at dividend yield theory. To do that, we take their 5-year dividend yield average, 3.46%. We compare it to their current 4.06%, or over here where it says forward annual dividend, 4.06%, same number. And since their 5-year average is lower than their current, that speaks to undervaluation, right? These are inversely correlated. So the number being higher than their 5-year average speaks to undervaluation, which this one, according to dividend yield theory anyway, potentially is. And if this number was lower than their 5-year average, that would speak to overvaluation. Payout ratio is under the 75% that I look for at 64.25%. We went over the ex-dividend date and the dividend date payout there in October, so we're well past that. I like to drop down and look at free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they grow the dividends along with that. Now going back to January 2022 here, you can see $2.5 billion in free cash flow. 2023, that dropped significantly to $894 million, as well as their repurchase of shares, but we'll talk about that here in a second. 2024, their report out there in January, same thing, further dropped to $675 million. Now, I will say the trailing 12 months looks like they're back on the upswing here, but that does include some of these numbers here from January that they already reported out. So we'll have to wait another couple months to see what exactly they report out in January. But it does look like, according to the trailing 12 months here, that they are on the upswing. Now, they're not looking as good as they were in 2022, but it's nice to see them back on the upswing here. Repurchase of capital shares, you can see $3.5 billion in 2022. That dropped along with their free cash flow in 2023 to $1 billion. 2024 further dropped to $340 million, and then trailing 12 months $330 million, but some of that may be accounted for in these numbers here. But it doesn't look like they're maintaining that repurchase of shares, which is nice to see. I like to see a company pulling shares out of the market and not diluting you as a shareholder. Now, jumping over to stockanalysis.com, another source of information that I like to go to. You pick any sources that you like, but I do recommend at least 2, if not 3 sources, so you can make sure the information you are getting is accurate. It's a back check. Sometimes the information is out of date. Sometimes it's not updated regularly, and sometimes it's just wrong. People make mistakes. We're all human, and these websites are, monitored and managed by humans, so sometimes it happens. And sometimes it's a computer fault, right? Computers make mistakes too. The 17 analysts that have taken a look at this, they do call it a consensus buy. They have a low estimate of $80, which would be a 10.11% decrease from where it currently sits. Average estimate of $103.06, pretty close to what we saw with Yahoo Finance. That would represent a 15.8% increase. And if it happened to hit their high of $123, that would represent a 38.2% increase. All the while, you could collect that 4+% dividend yield if you were to buy them now. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well the company is returning capital back into itself, reinvesting back into itself, whether that's building new stores, whether that's buying down shares, whatever they're doing with that capital. Return on equity, again, above 10%. They're sitting at 42.41, well above the 10% I'm looking for there. Return on invested capital at 15.88%, again, above the 10% I'm looking for there. Very good numbers overall. Earnings per share growth is another one I like to look at. EPS is sitting at 15.98%. I like above 5% projected over the next 5 years, so three times what I'm looking for there. Very good. Revenue growth is forecasted at 1.41. This is what I typically look at more of a deep dive, but I add it here anyway. It's right there by it, so I capture it. Now, looking at their dividend history, as you can see, quarterly payout ratio, again, in the 64% range, 64.88. Dividend growth at 2.75%. So not fast grower, but at 4+% dividend yield, I can deal with a little slower growth. This is like a Verizon, where it's only like 1.9, right around 2%. But it's a 6% dividend yield. So same thing, 4% dividend yield, 4+% dividend yield with 2.75% growth. That's pretty good. 8 years of growth, buyback yield is positive at 2.03%, shareholder yield at 6.25%. So they're buying back shares at opportune times, and their shareholder yield is positive, which is what you want to see. Now, they do pay out on the January, April, July, October timeframe. So again, their next payout will be in January. Going back in time here, you can see March 2022, they were paying 88 cents. They raised that up in March 2023 to 92 cents. Most recent raise was March 2024 up to 94 cents. So I would anticipate another raise March of 2025 if they're going to maintain this payout schedule, raises this payout schedule, and it will show up in your April dividend. All right, how's this one stack up with the screener? Understand the business, that's where we start, right? A lot of you may have shopped at Best Buy, whether it's online or in the store. Growing free cash flow, no. They actually had several down years or a couple down years. It looks like this year may have been back on the upswing, at least according to the trailing 12 months. Growing dividend, yes, it's slow growth, 2.75%, but that's good growth in my opinion for what their payout is currently. Dividend payout ratio is under 75%, so check there. Dividend yield theory says they're potentially undervalued, so check there. It is not within 15% of a 52-week low. It needs to be in the $72 range or lower. Return on invested capital, return on equity, both over 10%, so check there. And earnings per share growth is above 5%, so check there. So we're looking at 1, 2, 3, 4, 5, 6 of 8. This actually is already on my watch list. I really would love if it dropped down into the 70s. I'd probably add it to my portfolio. There are a couple other ones I'm looking at. Pool is on my watch list. Maybe I'll do a video on my watch list. Chubb is on my watch list. Several of the ones that actually Buffett recently picked up have been on my watch list, like Pool, for a while. So I may do a video on that one again just to see how that one's shaking up if it pulls back this week. All right, that is it for this one. Let me know what you think of the video. What do you think of Best Buy? Is it in your portfolio? Is it one you're watching? Is it one you're buying? Or are you part of the people that were selling today? Are you part of that 3+ % decrease today because you were selling out of it? And if so, let me know why. Why would you sell it, or why did you sell it if you did? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up button, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So drop that comment down below in the comment section. I'll try to get back to you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. And I need to change this picture. This is not what my backyard looks like. Actually, I had a deer in my backyard today, believe it or not. I'll have to maybe cover that too. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.